Fort LP, the US-based investment management firm, will be celebrating its 20th anniversary this month. Over this period, it has achieved 16% returns each year for its investors, and here to explain how is Fort's principal Sanjiv Kumar. Sanjiv, welcome.
Thank you, Nick.
So 16% return per annum, tell us how this has been achieved.
We have maintained our focus and our discipline, and that's been the main key to our success. Our edge comes from taking advantage of persistent inefficiencies in the market that arise due to weakness in human behavior when it comes to investment decision making. And we spend a lot of effort trying to identify that edge. Then we convert that edge into a systematic computerized rule. We also try to make sure that this rule can adapt over time because things change. So we built in machine learning into our rules. In all our strategies, we try to produce returns which are uncorrelated to the returns from the stock market. And finally, we've always believed that a manager should be transparent and open and provide as frequent liquidity as possible to its investors. So we've provided daily liquidity to our investors now for the last 2 years, and I think many of our investors appreciate that.
How has the managed futures market fared over the last 5 years?
I think the last 5 years have been a very difficult period for the managed futures industry, which had a banner year in 2008. A lot of extra money came into the industry, but since then they haven't done well. We, on the other hand, have had a good previous 5 years. Many people say that this extra money that has come into the industry has been the cause of the poor performance, and I feel that maybe attributing to some of it, but a recent study by a broker New Edge shows that with this increased liquidity in managed futures, the futures markets have also grown and can accommodate this extra money. Some other people have said that there have not been many trends in the market in the last 5 years, and that's probably not true as well because we had a period where the stock market has almost doubled. Other people say that there has been too much volatility, which is related to interventions by the central bank. In the past, such interventions have actually been very profitable, as was the case with the events related to the breakup of the pound from the European Union.
So what needs to be done for the industry to regain profitability? Controlling
risk has become more important than generating returns, and I think the industry needs to return back to its roots. One of the big concerns now for the industry is that the cash returns have gone to close to zero, and the inflation rate, for instance, in the United States is close to 1.5% to 2%. So that produces a real negative yield. We in the industry really need to do something about it, of using this cash better, not just investing in treasury bills. We have to find a way to invest it in other instruments, but at the same time, we cannot lose sight of our two major attributes, which is that we provide very liquid portfolios to investors, and we provide returns that are uncorrelated to the stock market.
Now, Fort is launching a global macro fund in the coming months. Tell us about this.
So we have developed a very novel, unique approach on value investing, which is systematic. We purchase US and Canadian equities and hedge our exposure by selling futures against it, and we hold it passively for a year, and this produces a very different kind of returns. So this equity strategy is really going to be able to use the cash that has been sitting in our futures accounts, earning negative real yields. It not only solves the problem which is facing managed futures industry of having a lot of cash earning negative yields, but it also provides diversification in terms of strategies and will, I think, in the long run, reduce the volatility of our returns and while providing similar returns as we have generated in the past.
You also have a number of regulation changes to deal with, namely AIFMD in Europe and Dodd-Frank in the US. So what's your approach here?
In recent years, we have improved our backup and disaster recovery processes. We have worked with our legal counsel to improve our documents so that they're compliant with these regulations. We are registering with the SEC. In Europe, we are launching a UCITS fund, which will make us compliant with AIFMD throughout Europe. And we continue to feel that these steps are necessary, and as the industry grows and matures, and so that it can appeal to a wider base of investors, not just high net worth investors.
Finally, the Fed recently decided not to taper, so what's your outlook for the near term?
We will probably continue to see a benign environment for interest rates as well as for the stock market. The growth is not so weak that the market should get really worried, and interest rates are probably at the higher end of their recent range, so it's quite possible interest rates will decline in the coming months. That's going to provide a very good opportunity for a lot of the managed futures industry to do well, and we are certainly looking forward to it.
Sanjiv, thank you.
Thank you, Nick, for having me.